In today's video, we are breaking down a powerful interview with Jensen Huang, the CEO of Nvidia, where he explains why AI has just hit what he calls a new inflection point. Jensen joined Squawk Box on CNBC to discuss Nvidia's latest earnings, massive growth in its data center business, and the surge in AI chip demand that is reshaping the entire tech landscape. According to Jensen, the real opportunity now is identifying who the AI winners will be going forward, and that mindset is driving how Nvidia and investors alike are placing their bets. I am going to play the clip of Jensen Huang from CNBC first, then I will come back with my own reaction and breakdown of what he said and why it matters. After that, I will walk you through an in-depth analysis of two unstoppable tech stocks to buy now based on everything we are seeing in AI and the market today. If you find value in this kind of financial breakdown, hit the like button, share the video, leave your thoughts in the comments, and subscribe to the channel so you do not miss the next important investing update. Now, let's hear what Jensen Huang has to say.
Demand is really strong and it's diverse. It's coming from all over the place. At the core of it, Becky, what's happening is that AI just went through its third inflection. The first one was 2 years ago with ChatGPT. And then the second one was about a year ago when the reasoning AI agents came out, reasoning AI systems came out. And the number of tokens, the amount of computing demand that it needed to be able to reason and produce all the excellent answers that these chatbots were doing was really sky high. And then now with these agentic systems, we're now having these agents able to reason, take tasks, and actually do work. And so the agentic systems are doing incredibly well all over the world. Of course, you've heard how Claude Code and OpenAI's Codex are doing incredibly well in companies all over the world in software programming, but it's starting to spread out into all these different other types of tasks. And so at the core, it's because AI has gone through a new inflection point and the amount of computing demand is off the charts.
Well, let's talk a little bit about your customers, too, because you did say that the big companies, the big hyperscalers, actually increased the amount of spending. And I think they make up about half of the spending that went into the data center segment in particular. But you said the other customers were growing really quickly, and that's where so much of the growth came from. Who are those other customers? You know,
most people see AI as a chatbot. And it's understandable because OpenAI is so popular and they're doing so well. And we hear a lot about Claude Code. But remember, AI is about a new way of doing software and affects every single industry. NVIDIA is really fortunate in the sense that we are the computing platform, the accelerated computing platform for every cloud, for any model, as well as every different domains of science. And so we're seeing success, whether it's in small cloud service providers regionally around the world. It could be an enterprise. Our big partnership with Lilly. We have many others. Car companies that are building autonomous vehicles. The robo-taxi era is coming. And so there's a whole bunch of computing being built for that. Scientific computing is being completely revolutionized by artificial intelligence. And so, you know, the number of industries that are affected by AI, because AI is fundamentally a new way of doing software, is going to be very broad-based. And that's one of the reasons why I say AI is a new industrial revolution, because every single company is affected, every industry will be transformed, and every country will power it. And so it's broad-based.
Again, though, you talk about their market share of that data center chips, 95%. The estimates run from 90 to 98%, but about 95%. And when you have margins like that, 75%, it's obviously a market that lots of others want to get involved with. You did hear earlier this week about AMD cutting a deal with Meta. That's supposed to be a multi-year deal that they're going to be looking at as well. You have all kinds of competitors who are trying to get in on that, but you also have Nvidia kind of running as fast as they can. The new chips that are going to be rolled out, they talked about those new chips that are coming Vera Rubin's. That will be the second half of this fiscal year, and that is the way that they are planning to try and keep some of that market share. We'll show you more excerpts from this interview a little later today, just talking about the competition they're facing, talking about what he sees with the SaaS apocalypse, or whatever you want to call this, just where those SaaS companies are really under pressure, because you also heard a report last night from Salesforce. That stock was trading a little lower on some of these questions, but we'll get Jensen's take on whether this is overdone in the market.
All right, this was not just another earnings victory lap. It was a pretty revealing look at how Nvidia sees the future of AI, why their dominance keeps growing, and why a lot of companies are struggling to catch up. I also want to give you my honest take along the way, because some of what was said deserves a little skepticism and some of it is genuinely impressive. So first, let's ground ourselves in the numbers that kicked this whole conversation off. Nvidia just reported better than expected fourth quarter results, and the real headline is the data center business. Revenue there grew 75% year over year, which is massive at this scale. We are not talking about a startup doubling off a small base. This is already a giant business. Nvidia controls roughly 95% of the data center AI chip market, depending on who you ask, and they are doing that with gross margins around 75%. That combination alone explains why Wall Street treats Nvidia like the center of gravity for the entire AI trade. And honestly, this is where I think people need to pause for a second. A company with that level of market share and that level of margin is not just doing something right, it is benefiting from a structural advantage. Nvidia is not simply selling chips. They are selling an entire ecosystem that competitors still cannot replicate in a meaningful way. When Jensen starts talking about demand, he makes it very clear that this is not just one group of customers piling in. He says demand is strong and diverse, and that word diverse is doing a lot of work here. According to him, AI has now gone through its third major inflection point. The first was about 2 years ago with ChatGPT, which made AI feel real to the public. The second was about a year ago when reasoning models and AI agents started showing up, dramatically increasing the amount of compute required just to function properly. Now he says we are in the third inflection, which is agentic systems. These are AI systems that do not just respond to prompts, but can reason, plan, take tasks, and actually perform work. That distinction matters a lot because it explodes the amount of computation needed. You are no longer generating a single response. You are running chains of reasoning, decision trees, memory, and action loops. This is where I personally agree with Jensen almost completely. If you have ever used newer AI tools that can autonomously debug code, manage workflows, or simulate decision-making, you can feel the jump in complexity. These systems are compute hungry, in a way earlier chatbots simply were not. So when he says computing demand is off the charts, that does not feel like hype to me. It feels accurate. He also name drops examples like OpenAI's tools and cloud-based coding systems that are spreading rapidly inside companies. The important part is not the specific product names, it is the idea that AI is escaping the chatbot box. Jensen makes the point that most people still think AI equals chatbots, and I think that is absolutely true. The public conversation is lagging behind what companies are actually building. From Nvidia's perspective, this is perfect. They are not betting on one killer app. They are betting on the fact that AI becomes the new way software itself is written and deployed. If that happens, every industry becomes a customer. When the interviewer asks about customers, this is where things get really interesting. About half of Nvidia's data center revenue still comes from the big hyperscalers. Think the largest cloud providers spending billions at a time. But Jensen emphasizes that the fastest growth is coming from everyone else. Smaller cloud providers, regional players, enterprises, pharmaceutical companies, car companies, and scientific research institutions. He talks about Nvidia being the accelerated computing platform for every cloud, every model, and every scientific domain. That sounds like marketing, but there is truth there. Nvidia GPUs are used in drug discovery, climate modeling, physics simulations, and now increasingly in robotics and autonomous driving. The mention of partnerships like Eli Lilly is a good example. Pharmaceutical companies are not experimenting anymore. They are committing real capital to AI-driven research pipelines. That means sustained demand for compute, not just short-term experimentation. He also brings up autonomous vehicles and robo-taxis, saying that era is coming and massive amounts of computing are being built for it. This is where my opinion diverges slightly. I agree that autonomous systems will require enormous compute, but I am more cautious about the timeline. We have been hearing about robotaxis being just around the corner for years. I do think progress is real, but I am less convinced that it will scale as fast as Nvidia would obviously like it to. Still, even partial success in autonomy requires insane levels of simulation, training, and inference. And again, Nvidia wins whether autonomy arrives tomorrow or 5 years from now, because all of that development work happens on their hardware. Jensen frames all of this as a new industrial revolution, and while that phrase gets overused, I actually think it fits better here than in most tech hype cycles. His argument is that AI is a new way of doing software, and since software touches every industry gets transformed. That is not a crazy claim. It is basically the same logic behind the internet revolution, except this time software itself is being automated and enhanced. Then we get to the competitive pressure, which is where the tone of the interview subtly shifts. Nvidia has about 95% market share in data center AI chips and margins that make competitors salivate. Naturally, everyone wants in. The interviewer mentions competitors like AMD cutting deals with Meta and other companies trying to break into this market. Jensen does not sound defensive at all. Instead, the strategy is clear: run faster. Nvidia keeps rolling out new chips at an aggressive cadence. The upcoming Vera Rubin architecture is positioned as the next leap forward, and it is scheduled for the second half of the fiscal year. This is classic Nvidia. They are not waiting for competitors to catch up. They are stacking generation after generation of performance gains, while also locking customers deeper into their software stack. CUDA, frameworks, optimized libraries, and developer tools are the real moat here. Competitors can make a decent chip, but replicating that ecosystem is a completely different challenge. My personal take is that this is why Nvidia's dominance is so hard to crack. It is not just about silicon, it is about time. Nvidia has had years to refine this stack while everyone else is playing catch-up under intense pressure. Toward the end, there is a tease about competition, SaaS disruption, and what Jensen sees coming next. Even without hearing the rest, the message is already clear. Nvidia believes the demand wave is still early, the use cases are expanding, and their position at the center of AI infrastructure is stronger than ever. Whether you are bullish or skeptical on AI as a whole, it is hard to ignore the structural position Nvidia is in right now. After watching this interview, my takeaway is that Jensen Huang is not just reacting to demand. He is framing a world where that demand keeps compounding across industries, and so far the numbers suggest he is not wrong. The big question is not whether competition will emerge, because it will. The real question is whether anyone can catch Nvidia before the next inflection point hits. And if this really is the third inflection, there is a good chance the fourth one is already being built inside Nvidia's labs right now. Now let's dive into the two unstoppable technology stocks to buy now. The first company on the list is Advanced Micro Devices, ticker symbol AMD. Before we talk about financials or valuation, it is critical to understand why AMD matters in the first place. AMD sits at the heart of modern computing. The company designs high-performance processors and accelerators that power everything from personal computers to cloud data centers. In an era where computation is the backbone of productivity, automation, and artificial intelligence, the companies that enable compute at scale are not optional players. They are foundational. What separates AMD from being just another chip designer is how central its products have become to the future of computing workloads. Over the past several years, computing demand has shifted away from simple consumer tasks and toward complex workloads like cloud infrastructure, data analytics, and AI-driven applications. These workloads require chips that can deliver strong performance while also being efficient in terms of power and cost. That is where AMD has steadily carved out its advantage. AMD's moat comes from its engineering execution and its ability to deliver performance per dollar that customers actually care about. In data centers, efficiency is everything. Large-scale customers are not impressed by raw specs alone. They care about how much compute they get for every dollar spent and how much energy is consumed to get that performance. AMD has consistently improved on both fronts, which is why it has been able to win share in markets that were once considered closed. One of the most important growth drivers for AMD is data center expansion. The global shift toward cloud computing has not slowed down. Enterprises continue moving workloads off legacy systems and into centralized infrastructure that can scale on demand. Every one of those servers needs powerful processors, and once a cloud provider adopts a particular architecture, it tends to stick with it for long periods of time. This creates long-lasting revenue streams rather than one-off sales. Another growth engine is AI-related compute. Not every AI task runs on the same type of hardware. Some require specialized accelerators while others rely heavily on general-purpose processors optimized for parallel workloads. AMD's expanding product portfolio allows it to participate across a wide range of AI use cases. As AI adoption spreads across industries, the demand for flexible and scalable compute increases, and that plays directly into AMD's strengths. Gaming and graphics also remain important pillars of the business. While gaming demand can be cyclical, the long-term trend is still toward richer, more complex digital experiences that require powerful hardware. AMD benefits from these cycles while also balancing them with more stable data center and enterprise demand. This diversification matters because it smooths revenue over time and reduces dependence on any single end market. From a financial perspective, AMD has demonstrated the ability to grow revenue by expanding both market share and addressable market. That combination is powerful. It means the company is not just riding a rising tide but actively outperforming within it. Over time, that kind of execution tends to separate long-term winners from companies that fade when conditions change. What makes AMD compelling right now is not just what it has accomplished, but where it is positioned. The demand for compute continues to rise as software becomes more complex and more automated. Data centers, AI workloads, and advanced computing are not temporary trends. They are structural shifts. AMD's products are directly aligned with those shifts, which gives the business long-term relevance. This is not a story about a quick trade or a short-term earnings pop. It is about owning a business that is becoming more important as the digital economy grows. For investors who think in years rather than quarters, that distinction matters. Before we move on to the second stock, let me quickly share today's sponsor. This video is brought to you by Value Stocks Investing Master Course. If you're looking to grow your wealth by investing in solid, undervalued stocks, but not sure where to start, I created the Value Stocks Investing Master Course to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. Now let's move on to the second company in this video, Palantir Technologies, ticker symbol PLTR. To understand why Palantir matters, you have to forget the way most people casually think about software. Palantir is not a consumer app, and it is not a plug-and-play tool that anyone can deploy in an afternoon. It is a deeply embedded data intelligence platform designed to help organizations make better decisions in environments where complexity, scale, and uncertainty are extremely high. At its core, Palantir helps organizations integrate massive amounts of fragmented data, clean it, model it, and then use it to drive real-world decisions. That may sound abstract, but in practice it means optimizing supply chains, managing risk, coordinating operations, and responding to dynamic situations in real time. In modern economies, data is everywhere. What is scarce is the ability to turn that data into clear, actionable insight. That is the problem Palantir is built to solve. Palantir's moat comes from the depth of its software and the difficulty of replacing it once it is deployed. Its platforms are highly customized to the specific needs of each customer. That customization requires time, expertise, and close collaboration. Once a customer has built workflows, models, and operational systems on top of Palantir's software, switching to another provider becomes costly and disruptive. This creates strong customer stickiness and long-term relationships. Another key advantage is that Palantir's software is often mission-critical. It is not used for optional tasks or nice-to-have analytics dashboards. It is used in environments where decisions have significant financial, operational, or strategic consequences. When software becomes central to how an organization operates, it tends to remain part of the stack for a very long time. Palantir's growth drivers span both public sector and commercial markets. On the public sector side, the company has long-standing relationships with government agencies that operate under long-term contracts. These contracts tend to be multi-year in nature and are often renewed as systems expand and evolve. That provides a level of revenue visibility that many software companies do not have. On the commercial side, Palantir has been steadily expanding into industries such as healthcare, energy, manufacturing, and finance. These sectors generate enormous amounts of data and face constant pressure to improve efficiency, reduce costs, and manage risk. Palantir's platforms allow these organizations to unify data across silos and make faster, more informed decisions. As more companies realize the strategic value of their data, demand for this type of software increases. A particularly important trend for Palantir is the rise of AI-driven decision-making. AI models are only as good as the data and context they operate within. Palantir provides the infrastructure that allows organizations to deploy AI in real operational settings, rather than as isolated experiments. This positions the company not just as a data analytics provider, but as an enabler of enterprise AI adoption. From a financial standpoint, Palantir has shown consistent revenue growth, driven by both new customer wins and expansion within existing customers. This expansion dynamic is crucial. It shows that customers find increasing value in the platform over time. When customers spend more year after year, it signals that the software is delivering measurable returns. Palantir has also been improving its margin profile as it scales. Software businesses benefit from operating leverage. Once the core platform is built, additional revenue can be added at relatively low incremental cost. As Palantir grows its customer base and expands usage, this leverage can translate into stronger profitability over time. For long-term investors, this combination of growth and improving margins is a powerful driver of compounding value. Another aspect worth highlighting is Palantir's focus on long-term partnerships rather than transactional sales. The company often works closely with customers to adapt its software to evolving needs. This collaborative approach helps cement relationships and increases the lifetime value of each customer. It also creates barriers for competitors that lack the expertise or resources to match that level of engagement. When you step back and look at the broader picture, Palantir is positioned at the intersection of data, software, and decision-making. As organizations face increasingly complex environments, the ability to see clearly and act decisively becomes a competitive advantage. Palantir's software is designed to provide that clarity at scale. Now that we have broken down both businesses individually, it is important to step back and think like a long-term investor instead of a trader reacting to headlines. The real opportunity with stocks like AMD and Palantir is not predicting what happens next quarter. It is understanding how these businesses fit into the future of technology and how that future creates compounding value over time. With AMD, the long-term thesis centers on compute becoming more critical, not less. Every major technological shift of the last several decades has increased the demand for computing power. Cloud infrastructure, artificial intelligence, advanced simulations, and digital services all rely on increasingly powerful and efficient chips. AMD sits directly in the path of that demand. Its products are not optional upgrades, they are core components that enable modern systems to function at scale. What makes AMD especially interesting over the next decade is how it balances innovation with practicality. The company is not chasing every trend. It is focused on delivering performance, efficiency, and value where customers actually need it. That focus has allowed it to gain share in highly competitive markets and build long-term relationships with large customers. When customers trust a chip provider with their infrastructure, that trust can last for years. Palantir, on the other hand, represents a different but equally powerful long-term story. As organizations generate more data, the challenge shifts from collection to interpretation. Data without insight is noise. Palantir's software is designed to bring structure, context, and clarity to that noise. It helps organizations understand what is happening, why it is happening, and what actions to take next. Over the next decade, decision-making will become increasingly data-driven across both public and private sectors. Companies that can make faster and better decisions will outperform those that cannot. Governments that can coordinate complex operations more effectively will operate more efficiently. Palantir's platforms are built specifically for these high-stakes environments, which gives the company long-term relevance. One of the most important similarities between AMD and Palantir is that both businesses benefit from high switching costs. Once a customer commits to a hardware architecture or a deeply integrated software platform, moving away is difficult and expensive. That creates customer stickiness and predictable revenue over time. For investors, this kind of durability is extremely valuable because it reduces uncertainty and increases the likelihood of sustained returns. Another shared characteristic is alignment with secular trends rather than cyclical ones. Short-term economic cycles come and go, interest rates rise and fall, sentiment shifts constantly, but the long-term trends driving demand for compute and data intelligence continue regardless of those fluctuations. Businesses aligned with these trends have the potential to grow through multiple market cycles. This is why it is important not to view these stocks in isolation. They are part of a broader technological transformation that is reshaping how work gets done, how decisions are made, and how value is created. Investors who recognize that transformation early and position accordingly often benefit from years of compounding growth. If you want exclusive stock tips, in-depth analysis, real-time trade alerts, and free investing guides, join the Stocks Galore Patreon today and take your investing game to the next level. Our members get full in-depth analysis on most of the stocks mentioned here. Head over to patreon.com/stocksgalore and become part of our growing community of smart investors. Link is in the description. Now I want to hear from you. When you compare these two businesses long-term, which advantage do you think matters more over the next 10 years? AMD's position at the center of global compute infrastructure, or Palantir's role as a critical intelligence layer for data-driven decision-making? Let me know your thoughts in the comments and explain why. Do not forget to like the video, share your thoughts in the comments, and subscribe so you do not miss the next important investing update. Thanks for watching, and I will see you in the next one.